far as valuations go, and I'm just curious myself, for this industry, I'm assuming, as in most industries, I believe the higher and higher your net profit or your EBITDA,
Mhm.
the higher the multiple you get. Is that generally how it goes, probably in this industry as well? And
So
what
there's
sort of ranges do you kind of expect from, let's
mhm,
say, your net profit between 0 and 1 million, or
mhm.
1 million plus?
Great question. Great question. So we have an internal matrix that we've created, and there's two ways to value a business like this. These. First of all, you use the income method. The income method is a multiple of EBITDA, right? Earnings before interest, taxes, depreciation, and amortization. Our
Yes.
course teaches you that, but your CPA should be able to tell you what EBITDA is. But EBITDA starts with earnings, right? So if you have no net profits, you're going to have a very low EBITDA, right? So
Yeah.
earnings is the number one thing. Then it's depreciation of the equipment is part of it. So
Sure.
EBITDA is critically important. So what goes into it for a company depending upon size? Okay. If you are a local company and if you are on Google page 1 or 2 and your business has grown 10% a year and you're profitable, you're going to be at a 2 to 3 times EBITDA. Okay, it's never going to go above that. It's a 2 to 3 times EBITDA. We can show you how, even if you're at $1 million company, we can show you how to improve the value of your business, because I can show you two companies side by side and they can have the same top line income. One is worthless, and the other is worth significant money. It's not every nickel you're going to need to retire on, but it's a pretty good amount of money. The difference is within the financial statements. The difference is how the business has been managed. Okay, so a solid EBITDA, just so everybody can put a number on it, a solid net profit for this industry is somewhere between 10 and 15% net profit. So what does that mean? That means on $1 million company, the company should generate a net profit of 100 to 150,000 after the owner's been paid a decent W-2 wage. Now, am
Yeah.
I talking about taxable income of 100 to 150? No. I'm talking about net ordinary income. Income from the day-to-day business, right? The bottom line should be on $1 million, somewhere between 10 and 15%. And this is what our course shows you.
Yeah.
A quality EBITDA, a quality EBITDA should range from 17 to 22%. So on $1 million, your EBITDA should be $220,000. So your business is worth somewhere between 2 and 3 times that number. And we
Okay.
can, that's how we do it. Now, market method, market method is a little bit different. Market method are industry trends of like transactions. And there's several different market equations. Okay. One of them, and they're less scientific than income. One is a factor of top line income. And the factor of top line income is somewhere between 0.3 and 0.4. So what does that mean? On $1 million worth of business, your business is worth somewhere between $300,000 and $400,000. It's not scientific, because there's a little bit
Yeah.
more to it than that.
Sure.
If you are priced properly and you're priced above the market, if I look at 10 companies and you're priced above 5 of them, you're going to have a higher factor. Okay. The lower you're priced, the lower the factor. Okay. So, the reason why we did the course and the reason why we do what we do, and we do a lot of education, is if you are looking to create an asset that you're ever going to want to sell, there are critical financial metrics that you need to bake into your business. Okay.
Yeah.
And one of them is revenue growth, but the other is good gross margins for the industry,
Yeah.
quality gross margins. And then the third is net income. But if you're not able to pay yourself a W-2 wage, my question to every operator out there is, why do you own a business if you're in your prime earning years and you're not able to pay yourself what you would make from a 8 to 5 job someplace? And the answer is, well, I like to own my own business. Terrific. but there's a tremendous amount of risk to these businesses. So
Sure.
you better be making a good W-2 income. You know, at some point I want to do the next one with you is what does it take to be a top 10% performer? And I don't mean top 10% is size, is terms of size. Because some of the largest companies in that I've examined in specific markets are the least profitable because they're not run right.
Yeah.
The top 10%, and then that should be our goal, is to be top 10%, meaning the best known brands in the market is only one piece of it. But how do I pay myself in the top 10%, regardless of size? How do I pay myself well for the business that I do? But yeah, we'll have to look at that at a later
Totally.
date.
And so your course will go over, so you pulled up that sheet of that Volvo and the
Mhm.
expense. So your course teaches them how to pull
Absolutely.
up those sorts of reports and probably how to generate their own, what is it, the income statement or balance sheet.
It's funny that, yes, the answer is it will teach every business owner the financial fundamentals that they need to know in order to be the most profitable, to pay themselves a decent W-2 wage. And the sad part is, it's not a sexy topic in this industry, but it's the most neglected. It's the
Yeah.
reason why, people don't have money to put down when they're trying to buy their fifth, seventh, or 10th vehicle. I mean,
Yeah.
I deal with,
Financing from the bank. How do you get that when you don't
correct,
know?
correct.
Are most of the companies you audit, are they typically getting these statements? I get the state. I have an accountant. I get the statements
Mhm,
each month, but the
mhm,
accountant doesn't just do digital marketing agencies. And how
correct.
many of these accountants that these companies use that you're auditing, get a statement each month? I'm assuming the bigger ones all do, but are they trained? Are those accountants trained on this industry? Um,
Interesting, exceptional question. Okay, because this is one of the things I've learned since doing this since 2018. Your accountant is going to produce for you what's called a GAAP financial statement, which is a financial statement in generally accepted accounting principles, using generally accepted accounting principles. Okay, but they want to do it in a standard format that makes it easy for them to push out 100 of those a month,
of
right?
course. Yeah.
And
Yeah.
their
Yeah.
standard format is simple. It's a bucket of revenue and a long list of expenses, right? What we do is tailored for the industry and it orders the P&L. And we show accountants how to do this constantly. And we have bookkeepers and accountants that the owners of the business have taken our course and they hand the chart of accounts and the P&L template to their accountant and the bookkeeper. What it's going to give you is a lot more metrics than whether you made a profit or whether you created a loss. It's going to tell you whether you're priced properly. It's going to tell you what your cost of goods are accurately. It's going to tell you what you're spending on reservations and dispatch. Everything is measured as a percentage of total income. And it's everything that we've looked at is based on the good practices we've seen and implemented based on the 250 companies we've reviewed, right? So you hit the nail on the head. Your accountant is absolutely going to get you a set of P&L, a financial statement that says, did you make money or did you lose money? But it's not going to tell you where, how, or why you lost money or made money. What we're going to do is break it down and say, okay, you're paying your drivers a lot more than the average company in your market, which is okay, but we need to be priced a little bit higher because you're paying over the industry average, or your overtime is way too high here. We need more drivers. So it's giving you a set of financial metrics that your accountant will never be able to produce unless he's using the chart of accounts built for this industry. Because his chart of accounts is just general, it's
Yeah.
standard,
Yeah. Yeah. Yeah.
you know?